Good afternoon, welcome to Market Round number 211. Stuart Williamson here at the helm, APW. Now this week we're going to talk about interest rates and football, and I was going to call the market wrap, the topic was going to be if interest rates are human, we'd be throwing paper cups at them. That is how boring they are. Sluggish, boring, not interesting, not doing what they should be doing, can be applied either to the English football team or to interest rates in the UK. That was what we've been seeing so far. However, on Monday, the English football team didn't become better. What actually happened was interest rates were cut by Barclays, and there were very aggressive cuts to their 2 and 5 year rates. Now, why they did that is probably in anticipation of the August cut that's going to be coming from the Bank of England. But it was quite aggressive, and it sends a signal out to everyone that it's about time we got out there and started taking interest rates more seriously. So perhaps it isn't going to be boring, okay? Or will it be like a Euro hangover for England? And I don't know about yourselves, but I woke up on Wednesday morning with that nostalgic but unmistakable feeling, a sore head, dry mouth, general listlessness, and a sense of annoyance that once again England had failed to perform. And I feel the same with interest rates. And I know that's pretty sad, but that's the way it is. So why has Barclays done this? As I said, to get a march on the market. But also, if you look at the swap rates, they've been falling considerably over the last month. There's something called the 5-year SONIA, and the 5-year SONIA has dropped by nearly 1%. What does that mean to us? It means that the margin for profit the banks have has gone from 1.5% to less than 0.7%. So cutting rates now means you're getting a larger part of the potential market, and so maintaining your profitability. And so I think this is what Barclays are all about, is trying to get out there and get their market share up and higher quickly. So let's just cover a bit more on rates. What's going out there in the marketplace? The frightening things are disappearing a bit in quite a negative way. In the US, consumer confidence is waning. They're expecting that interest rates in the US will be cut by 0.75 basis points. In the UK, recently the Purchasing Managers Index results came out, which is the thing that the Bank of England looks at very closely to see whether there's positive or negative sentiment out there, and that has been falling. So the confidence is getting less. So against that sort of general benign, slightly wet sort of background, I think we could be in for a not disappointing summer. We should have interest rates cut in the way we expect. And as I mentioned last week, if we do have a Keir Starmer surge akin to the Boris bounce, that linked with 3 interest rates cuts could mean that property prices will shift and start moving again. I mean, they already are sort of like in the northern half of the UK. London has been flat there for so long, it's been nearly 9 years, I think, since London actually showed any upside. And as we mentioned again, you know, the coastlines are all down by 6% plus. Perhaps that will be arrested and we'll see people start to get back into the marketplace. That sort of positive sentiment is a really important thing for people to see. On the negative side, Rightmove recently came out with a report, I think it was on Tuesday, where they talked about the fact that for first-time buyers, the cost of paying a mortgage is now 61% higher than it was at the last election. Okay, since the last election, house prices have gone up by 19%, but the cost of borrowing for first-time buyers has gone up by 61%. And this highlights really where whatever government gets in, Keir Starmer or Rishi Sunak, you know, they have to focus on these topics. What can we do for first-time buyers? What we're seeing at the moment is a lot of first-time buyers are extending their mortgage terms, and they're getting out to 30 to 35 years. And that's just, you know, it's not a sensible way to deal with money problems. We need to be better. And so the survey that Rightmove came up with was that we should be giving first-time buyers more support, i.e. fixed terms perhaps for longer. I was talking to a French gentleman this morning, and we were talking about his portfolio in France, and he took the lending out on a 15-year basis at 1.8%. And in 15 years, the whole loan has been repaid. So it's capital repayment. 15 years. He took the same loans out in the UK. They came off the float at their fixed period after 5 years, and they went up to 9%. So he's now got 9%, which he's had to convert into interest only. So you compare what we're doing to what people are doing in other locations. You know, the US is the same, long-term fix. Perhaps having that for first-time buyers, bring that into the mix, will be beneficial for them. And, you know, it's difficult because people are living longer and longer at home. You know, I've got children who are getting into post-university age, and the last thing I want is them living at home with me. You know, I love them, but having them there for that length of time would drive us all bonkers. And it's not good for the development of of a natural interactive human being. So working from a social perspective, more support for first-time buyers, perhaps more help to buy. I was talking to a gent yesterday, and he has a help to buy scheme in the UK, and explained how it worked, and it really is, very good and helped him get on the ladder, and which he's done very well on. So these sort of incentives are the sort of things that we should be looking at, and I think it'll be good for the economy in general if parties do stop just talking about it and actually go out and do it, because they're all very well known for it. Rishi Sunak is saying now, you can trust us, we'll go and do these things for you. But you can't be, because you've been in power for 13 years and you've not done it. So it is time for a change. So that's a coverage on interest rates. I know it's not very exciting, interest rates, not very stimulating, and it's very similar to the England football team. Not very exciting, not very stimulating. Gareth Southgate has said, it's all my fault. I take all the pressure so the players don't have to. But it looks like the players are taking some of the pressure, so really he's not getting it to work. He doesn't take any blame for interest rates, which I can understand. So please do subscribe, like, comment if you can. Put some information in there you might think is useful for us, i.e. what sort of mortgage rates are out there, how do different countries deal with it, and so on. Also, do get a chance, go to our new website, apw-property.com. Okay, have a look. It's all interactive, it's lovely, and we're going to get loads of good stuff up there. Thank you very much. Take care. Cheerio.